Hello, today we're going to talk about the prospects for European monetary policy at the end of the tenure of Mario Draghi, who has led the European Central Bank and ends his tenure at the end of October. And this comes at a crucial part when he's about to be replaced by Christine Lagarde as the governor of the ECB. And the Eurozone stuck with negative interest rates, needing to understand what pathway it is going to take in order to reflate the economy, return growth towards 2%, and indeed return inflation towards 2%. Both of those targets have been systematically missed over the course of recent years, despite the best efforts of the European Central Bank. Well, the first thing to note is that we've seen in recent months distrust amongst the European Governing Council as various members have disagreed with further quantitative easing, a further cut to the deposit rate, the stimulus package announced by Mario Draghi designed to give a further kick to the Eurozone economy, which has been slowing partly as a response to heightened fears over global trade. And this, the calculation for investors is to whether this disagreement amongst the European Governing Council is various members positioning themselves ahead of new leadership from Christine Lagarde, or whether there are more fundamental concerns with the kind of impact that ever looser monetary policy is having. The second issue for investors to try and get their teeth into is that a slowing Eurozone economy does consistently come back to the question of whether fiscal policy, so reduction in taxes, higher spending, particularly amongst the Eurozone's biggest economy, Germany, is going to be something that investors will A, want to factor in, and B, welcome, given the inability for monetary policy to go too much further from its current levels. And that, I think, is a key calculation looking into the end of 2019 and into 2020, is whether the new leadership of the European Central Bank can be supplemented by support from fiscal authorities within the Eurozone. And the final aspect, really, to looking at the Eurozone growth outlook and the outlook for the ECB is whether structural reforms, the type of changes that are necessary for the Eurozone to move from being a low growth, low inflation economy towards a higher growth, higher inflation economy, are going to be widely supported. And indeed, if there's going to be democratic legitimacy, initially by the European the European Council and the European Commission, to try and do the kind of things that I think most observers, most economists would agree are necessary: capital markets union, banking union, the type of common fiscal tools, a common exchequer effectively for the Eurozone in order to support economic output at times of below growth when the Eurozone economy requires stimulus. And that in itself is the real challenge facing the new Commission as they come into office, and indeed the new governor of the ECB, as to whether they can work collectively to increase that trend growth, increase public spending, so that the next ECB tenure will not be defined by monetary policy being the only game in town.